As the proverbial ink was drying on the new blockbuster trade deal between the United States and China, President Xi Jinping on Tuesday took a veiled shot at Trump, saying, quote, bullying and tyranny will only lead to self-isolation. Well, David Nicholas, president and founder of Nicholas Wealth Management, is here to break down what this crazy trade situation means for you. So, David, what do you think of President Xi's shot at President Trump?
You know, it's actually ironic because China has really been the bully on the global stage for the last 2.5 decades. I mean, if you just, again, for a business to operate in China, we've seen intellectual property stealing by China where they steal companies' IP and then turn around and compete against that very company. We've seen forced technology transfer. So in order to do business in China, you actually have to give your technology over to the Chinese government, and then they can use that to create similar products. They've committed economic coercion by they've devalued their dollar. They've devalued their currency so they can pay their residents, their citizens, slave wages. I mean, that is the bullying, and that's why we really haven't had an even playing field. I've defended the free market and free trade for so long, but it's really made me second guess that if you're going to support free trade, your assumption is that we're all on an even playing field. We're not with China. We're absolutely not. I think U.S. and allies have to give up this notion that trade with China is on an even playing field. It's not. And so I think there's some good things hopefully that will come out of this deal.
So how does this blockbuster trade deal impact me, impact my friend here, impact the normal American?
Well, I would say that unfortunately we get a lot of goods from China, right? So our trade deficit with China is close to 300 billion. So what does that mean? It means we're sending a lot less goods to China than China is sending here, the value of those goods. A lot of what we use on a daily basis, unfortunately, comes from China. So I actually read a report just today that just on Monday, the day after the tariffs were reduced by over 100%, that shipping from the ports of China had completely opened up. So the whole idea was China needed to get in front of the holiday season. Obviously, we have some time for that. But if these tariffs were still in place, it was going to hurt China. We've already seen almost 2,000 factories close in China. They were feeling the economic pressure of this. For U.S. consumers, unfortunately, while I don't like it, it does mean that the goods and services that we have, from retailers to Target to Walmart to clothing stores to Home Depot to Home Supply, that supply is going to continue, and there really won't be much disruption now that trade has started to open back up.
So if you look at different articles online, it depends on which article you read. Here's the question, David: who won this thing?
Yeah, well, it's not fully resolved. I would say that China they really they blinked first. So if you remember, they basically said we're not going to negotiate at all with the U.S. until the U.S. removes their tariffs. Well, what do? They dropped down to 40% on certain goods. They already were showing that they are going to bear the brunt of this. And also, if you just look at where the tariff's at, so we've got a 90-day pause currently. So there's not like there's a deal that's been decided on or been resolved. So the U.S. dropped from 145% tariffs on Chinese goods down to 30%. China dropped from 125% tariff on U.S. goods down to 10% tariff on U.S. goods. So you can already see it in the math right there. We're charging China 30% tariffs. They're charging us 10%. What does that tell us? Well, China's going to spin this as a communist government that they've won. They really haven't. They depend so much on the U.S. just by the very nature of the tariff amounts that we're charging 10% versus their 30 goes to show that China has more to lose on this deal. U.S. ultimately, I think, is the winner here. But we also have to ask a bigger question: is do we want to continue trade to the same degree with China that we have in the past? And to me, that the answer to that is no.
Well, see, you're in charge of your own company where people put faith in you to do what needs to be done with money. Honestly, I wish I knew more, but when my buddies are talking about what they're investing in, I'm like, guys, let me ask someone like a David, because they know way more than I do. So obviously you don't have a crystal ball, but maybe in closing, where do you see this thing going, and where do you see this thing going when it comes to, again, my friend here and how it impacts their life?
Yeah, so I think for investors, there's a lot of concern that China, if trade with China would have blown up, that would have been very bad for markets. We saw what happened a month ago where the market sold off. S&P was down almost 20%, so put it almost into correction territory. Now that there's a 90-day pause, and Scott Bessent came back from Geneva saying that we've got these deals specifically that we're going to work out with China, that it looks promising. I think the worst case scenario for the market's off the table. So what that means for investors is you want to consider putting money to work. There's a lot of stocks like names like Apple, Nvidia that have really got hurt. Tesla was down significantly. If you look at Tesla, Tesla's recovered up 40% in the last couple of weeks, and it seems like when no one was paying attention. So I think you want to be putting money to work, but also keep in mind markets are still trading at 22 times forward earnings. That's still fairly expensive. But I think the market this year ultimately ends higher. I think you see the S&P 500 up to 6,500 by the end of the year, driven by the tariff issues getting resolved. But you know what's next, Raj, is the tax deal that's coming out of DC that'll hopefully create an environment for business owners and individuals where you keep their tax base low, eliminate taxes on Social Security and other for middle income Americans. That I think is the next drive higher that ultimately markets should do well, which I think you can put money to work here.
Well, I live in California, so I don't even know what taxes are. Just kidding. David, you are David, you are amazing, my friend. I'm really impressed with, I met you when you were younger and you're really crushing the game right now, brother. So Nicholas Wealth Management, my friend David Nicholas, thank you so much, my brother.
Absolutely, brother. Great to be here. Look forward to it again.